Good morning, good afternoon. Thanks for joining us. I'm Kevin McPartland, the head of market structure and technology research at Coalition Greenwich. I have to say I'm thrilled to be here in New York in real life at Tradeweb's offices in Midtown Manhattan with Tradeweb President Billy Hult.
Great to see you. Great to see you, Kevin.
Good to see you. Yeah, exactly. I'm excited. It's the first time in a long time, so
Absolutely.
Really excited to be here and to have a great conversation. So let's jump right in. Let's get some of the obvious stuff out of the way. Did you like working from home, or you pretty over it?
Well, I remember, I think it was almost, quite honestly, at the kind of height of the pandemic, you and I did something together. I think it was with, I'm trying to remember if it was with Chris at Market Access and Sonali at Bank of America, which Repetto kind of hosted it.
Right.
And you had this like incredibly fake kind of bookshelf in the background. And I was like, wow, this is like really, like we've really gone kind of work from home and remote. I had the kind of Tradeweb thing behind me. We were all kind of, all over the country. It was like such a weird time. There were times, I think we all kind of feel the same way about this. There were times where, it felt okay. And then there were times, I think, where we all felt like we were kind of losing our mind a little bit throughout the whole process. Like I've always been a big proponent of kind of a little bit of shoulder to shoulder, getting together, face to face, kind of all of that. But I can also at the same time, I think, understand sort of, that we all operated really well during those stressful times in a really strange, tough environment. There was an efficiency to it all, as you know really well. And then the question's always like, where are we on efficiency versus like the humanity of it all? And this is like a very human moment, like you and I sitting next to each other, actually able to talk, kind of smile, see each other face to face. That kind of means something.
Exactly. It's a whole different conversation. And yeah, we'll get to it more in a minute, but I'm still amazed that despite some of the talk about what went wrong and the liquidity issues during the worst part of the crisis, the market held up. You guys never went down. All of the other platforms, everybody was up. Trading continued, right? It was really an amazing feat.
Yeah, the market held up. I think this sort of like this move around the electronification of it all was like so hugely fundamentally important at that time. I don't know what your thoughts are on this. It's almost like it couldn't have happened the way it happened if the market wasn't already in that stage of electronification in a bunch of different marketplaces. It was so fundamentally important at that time, but it was like so weird. I'm sure you remember this so well, like that first week and a half before the Fed arrived, it was like hearing, on CNBC about what was happening in like the Treasury bond market, and they were talking about it so explicitly in a way that you don't really hear CNBC talking about, like the long bond and the bid ask on long bonds and all of that. So our marketplaces at that time were so front and center to what was happening. And I think there was a feeling like the market needed to be stable at some point for equities even to kind of recover the way that they did.
For sure, and the transparency that has been built over the last few years, in large part due to the technology, right, is why they could talk about it, why everybody could see what was going on.
It was interesting for us, this super well, like, government bonds was the first market like way back when that Tradeweb was in. And we've always felt like it was, the most important market, one of the most important markets in the world. And I think what's kind of interesting is like, all these years later, it's still this vitally important market. And I think the most interesting piece of it on some level is, and we've said this for a long time, like once a market begins to move electronic, once a market has gone electronic, it doesn't mean, and you know this super well, it doesn't mean that the innovations around the marketplace stop. In some ways, that's when they start. Yeah. So all these years later, we're still seeing, I think, really cool and really interesting innovations in the government bond market.
For sure. And the other thing that was fascinating is, yes, there were people that picked up the phone a bit more. Hey, what the hell? What the heck's going on? Yeah. But absolute volumes of e-trading in March of 2020 were records, right? Which is the opposite of what we would have seen 5-10 years before.
Yeah, it's again, almost can't imagine what would have actually have happened if the market wasn't at that really good state at that point in time. And then also it came back a little bit just to like the digitization of it all. Like, just from a post-trade perspective, being able to get all those trades flowing through the pipes and everybody working from home, there was so many different things going on at that time.
Absolutely incredible. So another topic, another big change over the last few years for you personally, for Tradeweb, your public company. We don't need to talk about the Tradeweb part of it, but for you personally, you built this business, you've been here 20 plus years. How does that feel?
I say this, very strongly. I built this business, obviously with Lee, and it was an interesting moment that I remember he and I had together I think it was the 1-year anniversary of when we went public, and it was at the beginning parts of the pandemic. But we had all kind of left the offices in the right way, and that had all started to happen. And I remember, like, I had on my calendar, and he had on his calendar, like, 1-year anniversary, ringing the bell of the Nasdaq, and I was like, well, that's what we know we're not doing today. And so it's interesting. It's hard to actually unbundle the sort of pandemic from the first couple of years, of us as a public company, because that first, that year of the pandemic was as big of a deal as anything. But we're absolutely, I would say, in a straightforward way, like, super proud to be a public company. I think a lot of things have gone really well for us. We've certainly worked really hard. It's been a different experience for us, but I think we were really kind of ready for that moment, and hopefully, I think we've executed along the way the right way, and I think the market's sort of respect for what we've been able to do, I think, has been pretty high.
Yeah, and it's been a great continuation of the evolving story of the electronification of sort of fixed income and OTC markets in general. Right?
Yeah,
it's just we're in a great place.
And there was a point in time, and Kevin, this really well. There was a point in time where it was almost like everything that we were doing at Tradeweb, or everything that was happening at Market Access, or back in the day at Broker Tech, it was all interesting, but it was a little bit sleepy and a little bit less sort of mainstream. And I think the big change over the last few years is really, like, these businesses that we are in, these marketplaces that we are operating in, what we've been able to do and what we will still be able to do has now all become sort of mainstream from a consciousness perspective. And I think the level of interest in all of this has risen. I mean, you and I, in a funny way, I know we both kind of are pretty amped up and follow Twitter pretty closely. Like, there are these, like, must follows on Twitter where you can really learn a lot about market structure and really strong opinions and really interesting opinions on all this stuff.
Yeah, well, and Chairman Gensler, right, he's active on Twitter, right? That is a huge change from just a couple of years ago.
It's almost, we couldn't have imagined that a few years ago. And now a lot of times you're actually being able to kind of go on these, with these follows and learn things.
If all goes well, somebody's tweeting about us right now.
Yeah, I mean, I can only hope Hide Not Slide, who I think, by the way, is one of the more interesting follows on Twitter, is following us, but he may be too busy kind of following crypto and all that interesting things that he's interested in.
Let's talk about bonds, not crypto, right?
Yeah.
So on that note, so we should talk about what's going on just in the market in general. You talk to really all the world's largest investors and dealers. Inflation, tapering, right? All the things that are in the press every day. What's the feel out there? How do your customers feel? How do you see it on the platform?
I think, if you just, talking about governments for a second, I think volumes have been really strong. I think obviously the story of, 2021 has really been about kind of record issuance and all of those things that have been good for the market and vibrant for the market. I think that there's a feeling that as the market maybe moves, into a different direction into the following year, that off the run volumes will pick up. I think that's a strong feeling. I feel like in general, the banks have done really well in the space. I think that's always been really good. I think in an interesting way, there was always a feeling that as markets moved more electronic, it would be more and more difficult for the banks to make money. I think we all kind of heard that and knew that. I think this year, and quite honestly, the year before, we're two opposite examples of that. And so from our perspective, to be able to see such profitability in the space as these markets continue to move electronic is a really good thing for the business overall.
Well, and the tools have evolved, right? So now, you guys and others, the dealers can still have that direct interaction with their customers. It's just an electronic interaction.
And you make a good point. The level of sophistication, particularly speaking, Kevin, of the buy side has changed dramatically. So you made a point around sort of everything that was happening in the market around March, April of 2020. If you were sort of at that point in time underutilized around how you were engaging with the marketplace around sophistication and electronics and all of that stuff, if you hadn't thought that through properly, I think you had a really, really challenging time. And I think the truth of the matter is you kind of learn that lesson once, and no one wants to be sort of left behind again. So I do feel like things like, and I talk a lot about AIX, I talk about how the buy side is engaging with the community in a much more sophisticated way, the way they're finding liquidity in the market, the way they're knowing who and which dealer to ask and when, how to break up large trades into smaller trades, how to kind of understand that dynamic in a much better, more sophisticated way is really one of the bigger and more important kind of evolutions of what's happened over the last couple of years.
For sure, and all of our research, both talking to the sell side and the buy side, their biggest requests are help us find ways to better interact with one another.
Yeah, I think that's true. And it's also a little bit like, and let's talk about this, it's also a little bit like what's happening with the expansion of counterparties. I remember you and I kind of sitting together a bunch of years ago. I think it was in Chicago, and we were talking a little bit around how the dealer community had gotten a little bit condensed, right? There was a period of time where there were maybe, 12 to 14 kind of strong market makers in the government bond space, for example.
Right.
And maybe from a big bank perspective, maybe that number has shrunk. Maybe it's gone from 12 or 14 to 8 to 6 or something like that. And I think that the buy side is always looking for more counterparties. I think some of that has been a little bit over the past bunch of years around the rise of the PTF firms.
Yeah.
I think what, for example, Citadel Securities has been able to do in terms of making their market making business much more mainstream and relevant in fixed income is a pretty strong statement. I think that's been very impressive.
Yeah.
I think there'll be more on the follow.
Agree, and I think in those early conversations we had all those years ago, it felt like Blackbox with high frequency trading was still thrown around, right? Which that term is sort of
it's different
now, right? So these are firms with franchises, with client-facing people. It's a very different world.
They're approaching it in a sort of more traditional way and actually having a lot of success. I think it's interesting.
And that's one of the other pieces of feedback we continue to get is those firms, as they come into the market, they also encourage the incumbents to better themselves and have better technology and be faster and quicker and more responsive, which is great.
We had started doing things, for example, just slightly pivoting around ETFs and different things that we were doing in the credit space, where we're identifying some of these firms as being absolutely 100% critical to that success.
Yeah.
As we wound up seeing a bit more of an opportunity for us in the government bond market around the central limit order book world,
right.
Having that connectivity to a jump, to a Virtu became absolutely critical for us. So it's really, we were in a really good position because of the fact that we had already kind of onboarded those entities as our clients, and we had just a tremendous amount of respect for how they think about market structure and their ability to continue to adapt.
Yeah, so let's get into that. So that was one of the more interesting Treasury market structure stories to me this year, was you guys buying the former eSpeed, right? Nasdaq Fixed Income. In some ways, it's all serendipitous, but can you talk about how's that been? What's the integration?
We thought, listen, we thought it was an attractive asset. Obviously, we thought the timing of getting stronger and bigger in the government bond market was a good time for us, in a very clear-cut way. I would say we felt like the marketplace was more than willing to sort of create competition, but it's easy to say that, right? And it's sort of like, how do you position yourself the right way to actually get that support? And it's not going to be like perfectly easy. Just because something arrives at Tradeweb doesn't mean it automatically has to and will work. There's going to be a lot of work from us from a client service perspective, from a market structure perspective, in terms of creating, I think, credibility and assurance. And obviously the technology side for us is always huge. At the end of the day, I think we feel really good about it. It's all of a sudden gone from, there was a point in time where I think the market share had really gone in one direction. And now, as you know, there's not just us, there's a couple of us kind of going after that extra, market share in the space. But we feel good about it. We have a really, really good Treasury actives team now here. And I think the early results are really strong for us.
That's great. So can you help us understand how it will work? So that asset, you obviously already had Dealerweb. And then we'll get to Tradeweb, but can you talk about how Dealerweb and the Nasdaq Fixed Income bits will come together?
Sure.
And then
Yeah, we had wanted to compete in that sort of what we would describe as like the wholesale actives space, right, for a while.
Right.
And so, the way we had decided that it made sense for us to compete sort of organically was through what we did was we built like a direct stream business. And that world pretty well. And quite honestly, we found a lot of success in that world. Through that success, we decided that now we have some momentum going. Now it makes sense when from the acquisition perspective And that's why we bought the order book. And obviously now what we're going to be able to do is present an order book and a stream business side by side to the community. We feel in a really good way that those businesses are really complementary. I think in a certain way, the more volatile the marketplace gets, we kind of then like having the order book business there.
Sure.
And in a quieter market, I think there's something very, very strong about how the streaming business works. And I think there's a lot of success there as well. So it's a really, this sort of two-pronged approach for us that's worked well. And then to make an obvious point, we are, I think, first and most well known for our RFQ business.
Right.
And that's the sort of traditional Tradeweb client dealer business. And this really well. There was a point in time where it was always considered like these two worlds have to live very, very separately.
Right.
It was, I think I had told you this old story of going to see someone senior at one of the banks who was running the rates businesses, and he was like, I like to keep, it's like kind of like a farm. I like to keep my sheep over here and my kind of cows over here, kind of thing, And I understood exactly what he meant, but those days have kind of ended. And so we will be able to kind of onboard clients from our Tradeweb world where we think it makes sense, and we're going to do all those things, and we're going to continue to kind of evolve with the marketplace.
Right.
I do feel really strongly that market structure changes, and it can change very quickly. We've all seen that evolution throughout these bunch of years. And from our perspective, we never want to be caught on the wrong side of change.
Sure.
So it's always like, how do we have enough tools kind of around us to be able to kind of apply them at the right time and make it all work?
Yeah, and that seems to be what we've heard, particularly in treasuries, is clients, they certainly want choice in how to trade. They don't necessarily want lots of platforms, but they do want choice, and that seems to be really what you've been building.
They want choice around protocols. I agree with you that they don't want lots of platforms, but they do, I think, in a cool and interesting way, want competition. And I think as a company, we've been used to competing, almost since day one, since you and I, met way back when in the early days of Tradeweb. We were competing with Bloomberg like side by side. Right. And I think that competitive dynamic has always been a good outcome for the client base. I think innovation comes in large part through competition. And I've had those conversations, with someone like Chris Kincannon at Market Access, and we've had a lot of back and forth around that. I think, I think competition for the marketplace is good.
Yeah, no, I absolutely agree. It's better customer outcomes, and it makes everybody better. So we talk a lot about treasuries. You guys do a lot else, right? There's the swaps business, the mortgages business, and how's everything else going? Where else have you been spending your time?
Yeah, credit we've been for sure spending a lot of time on, and I think we've done, I think the story for how we've achieved and done in credits is becoming more and more well known.
Mm-hmm.
And obviously, the mortgage market's always going to be super interesting to us and super important to us. Huge mortgage clients of ours have been big drivers, for example, of our swaps volume for a long time,
mm-hmm.
right? And so from our perspective, that's really an amplifier around the network effect. And all of those businesses have been good for us. It's been, you asked me about sort of work from home when we started our conversation. I do think Lee and I were talking about this a little bit this morning. It's been challenging for us because there was something so sudden around the work from home moment, the pandemic, the health crisis. Our business did really well and continues to do really well, but we've always wanted to strike, I think, the right tone around it because it's been such a, a real and serious kind of, year and a half now around all of this stuff. So we never wanted to be someone that was like, hey, we're doing great here as so many challenges were happening, both in New York City and around the world.
Sure. Well, and I think so one of the other things that the work from home has sort of brought to light is there is more to electronic trading than just the trade.
Yeah.
Right? It's a workflow, right?
Yeah, that's a really interesting point. Someone asked me, Kevin, not that long ago, and specifically around government bond trading. It's interesting that you mentioned it that way, whether or not it was still like a relationship business.
Mm-hmm.
And I wanted to say with like all of my heart and my might, like 100% yes. Of course it's still a relationship business. Like I feel that kind of in my bones.
Yeah.
I'm not 100% sure that's the most accurate way to describe it. What I would say to you is it's an experience business.
Okay.
Okay. And part of the experience is around the technology and the price and being able to deliver all of those things in a really straightforward, clean, important, credible way. Another part of that experience may be something around the relationship component of it all. But to just characterize it as purely still a relationship business, I don't think necessarily perfectly characterizes how important the price and the technology and all of that evolution has been, particularly over the last kind of year and a half, 2 years.
Agree, and I agree with you. There is still a huge relationship component. I think trust still matters. The fact we're talking about the ability for dealers to send prices directly to specific clients and to know those clients and how much that matters to both sides of the equation. But you still have to deliver. You still have to deliver the right price. You still have to deliver the right workflow.
That's right. And I think in general, I would say this, and maybe some of this has been a little bit about what we were talking about, the rise of, of a jump or what Citadel has been able to do in the government bond space or in the swap space. I do think in general, the dealers have gotten much more sophisticated, much more alert, much more engaged around their ability to deliver technology. It was sort of, I don't know, how many years ago was it that JP Morgan and Virtu did that kind of joint venture around governments? I feel like JP Morgan's gone really out of their way to have, in-house now really strong technology. I think that they're probably at the upper echelon of being respected around their ability to make prices to the marketplace. So everyone has kind of really amped up and understood, and I think properly respected the need to be able to do this.
Yeah. So actually that makes me think, so when you think about Tradeweb today, maybe compared to the 20 years ago, are you a tech company now?
It's like a financial service technology company. We're a tech company for sure. We live and breathe in the markets. That's like a big part of how we operate and how we conduct ourselves. This, and I think the audience kind of knows this. There was, not surprisingly, and in a sort of understandable way, a lot of sort of historical resistance to this sort of march of electronification in all of these different businesses. I don't want to say like that's over, but in a large part, the way that the market now operates has a lot more of buy-in. You can't just ignore it. You can't just say to me like, this is great, don't ever do it again kind of thing. And that's part of what we were talking about before, I think, which is just the consciousness around all of this has changed dramatically.
Yeah. I mean, I agree, right? It is here to stay. I think especially the biggest market participants realize to stay big, they need to compete. They need to be cutting edge on technology. But I think there's still a lot of room for innovation and efficiencies in a lot of OTC markets. Think about munis and CLOs.
There's huge kind of open field on some of those stuff, and you and I can kind of have a separate conversation on that for sure. But we feel that too. I mean, emerging markets, there's lots of different directions where this is going to go and will go.
Sure. And then a good point on emerging markets, right? So you guys are one of the first ones into China, for instance, right? A huge growing opportunity.
Huge growing opportunity. It's never going to be, we use this expression a lot, never going to be like straight line success, right, on this stuff, but we want to be positioned properly, positioned first. For us, in a certain way, interest rate swaps is like the perfect example of that story, right? Lee was really at the forefront of this a bunch of years ago, but we made a decision as a company that we wanted to get into the European swaps business. Maybe it was 2005, 2006, and then we complemented that with a dollar offering. It wasn't unbelievably popular. People had kind of seen what had happened with the government bond market and the mortgage market and the European government bond market. It was like kind of like, hey, this is not like necessarily for us. And so there was what I described before as like this resistance to it all. But we were first. We got kind of installed. We kind of figured out the workflow. And then when kind of, as you know well, when the crisis happened and then the regulation of it all happened,
you were there.
We were kind of a little bit catbird seat. And so that's an indication of like, you get in first sort of, and you have some advantages on some of this
for sure. And interesting you bring up Europe. It's interesting if we look around the world, the different levels of adoption, the different cultures and the way people take to it. For instance, like what we see Europe historically has always been a bit more electronic.
Yeah.
Maybe it's a language barrier, whatever reasons, but over years it's always been more electronic.
Yeah.
But the U.S. market seemed to be more interested in trying new things, new trading protocols, new ways of communicating.
That's interesting.
I wonder how it's hard to see how that'll evolve over time, but I suspect everybody.
I had not actually thought about it exactly that way, but I think you're spot on. It's kind of like it became more mainstream quicker in Europe, but there became more like, let's try it this way, let's try it that way kind of stuff, in the US. It's interesting. I hadn't thought about it. I'm not really sure why. Completely.
Yeah, no, it's hard to say, but
maybe again, I'm just, it's you and I kind of talking and people listening a little bit. I think that there is in the US a little bit of a culture of try stuff.
Yeah.
I think failure can be a badge of honor in the US in a kind of a cool way.
Yeah, especially these days, right? Startups
come and go, it's like, hey, I failed once, but then I hit it, the next time and then the next time. And I think people look at that as, something to respect.
Yeah, for sure.
Which is kind of interesting. We tried in credit a couple of different times, couldn't quite get it right. Then we figured out we had this real big, strong opportunity. For us, we wanted to hire, a really good team, which we did, a great team. And then it was a little bit in credit for us about like bringing in things that we do really well. And for us, that was partly the government bond market, back to governments and figuring out how to do the net spotting and the net hedging and create that savings, for the community the right way and have that resonate.
And then I know the portfolio trading has gone well, the dealer sweeps product has gone well. So you found your places and sort of made the whole pie.
Yeah, but if we tried once, we might not have tried again. And that's an interesting point that you made about that.
For sure. And so I know we're running a little short on time, but why don't we look forward, right? Innovation, there's all sorts of distributed ledger and there's just technology, AI, right? I know you guys are doing a lot there. What do you think is real? What do you think is going to have a real impact in the next few years?
For sure, everything around kind of AIX, and then I kind of made this point, and I'll answer this a little bit micro, but we all talk about this kind of like it went from the phone to the sort of the mouse of it all, and now it's off of the mouse, onto these kind of algorithms. Like that's here to stay.
Yeah.
The buy side is just getting more and more sophisticated. They're figuring out who to choose, when to choose. How do I run all my different kind of pricing formations around that? How do I get smarter around selection? How do I get smarter around liquidity? That's like going to happen. And it is continuing to happen.
Yeah, the people will go back to the office, but I can't see any of the technology progress going backwards.
Yeah, there were significant lessons learned, and those lessons will continue to be applied kind of period. And I do think, I made this point before, the profitability of these businesses being at a really high levels at moments that this was all happening is a really cool and interesting and good and positive combination of it all.
Yeah. And so any other sort of, from your client's perspective, innovations they are looking for, the questions you're getting the most?
I always, it's interesting, right? Like we always tend to get a lot of questions around show me data, show me how I'm performing, show me who's there for me. And it used to be a little bit of like, you can imagine this, the client sort of looking at it on a piece of paper and then trying to keep it straight in his or her head. And now it's all like how it winds up getting actually distributed into, from a technology perspective, the trading choices and the trading decisions. People are, though, have this thirst for knowledge around all of this stuff. And now it's really applying that into the sort of technology is a big deal.
And it's great, the virtuous cycle, right? More electronic trading leads to more data, which can lead to more electronic trading, and on we go.
Yeah, for sure.
Awesome. Well, Billy, this has been fantastic.
I get to see you in person, and no fake bookshelf behind you. Coalition Greenwich, which is awesome. You guys are doing a great job.
Thank you. Really appreciate it. Thanks for having us here. This was fun, and look forward to we'll catch up again in a couple of months.
Absolutely.
Thanks so much, Billy. Thanks everybody for joining, and we'll look forward to seeing everybody next time. Thanks so much.